Well, if you own Bitcoin, yeah, it's volatile, but it's volatile to the upside.
Right.
So
it's a big difference.
It's a big difference. So it's okay. The volatility is okay because over a longer period of time, it's going to appreciate faster than the dollar depreciates, basically.
Right.
And that's the trust. And so it's easy to take market share from that bucket. So you can see that the pie is growing and Bitcoin's share of that pie is growing at the same time.
The financial system is crumbling and bonds are no longer safe. 2020 proved that US treasuries are failing, leaving investors with major losses. Meanwhile, Bitcoin is rising as the new standard of wealth preservation. James Lavish explains that while Bitcoin's volatility seems risky, it's actually an advantage. As fiat currencies weaken, Bitcoin is gaining momentum. By 2025, it won't just be a speculative asset, it will surpass gold and bonds as the go-to store of value. Don't miss James Lavish's interview on why Bitcoin's takeover is inevitable. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio, and get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains on-chain data, forecasts and expert predictions. All of this is available free of charge. It only takes a moment to sign up and you can always change your mind later. Now back over to James Lavish.
Well, obviously, to you and me, Bitcoin it's sound money. It's hard money. It's something that cannot be debased. There's only going to be 21 million Bitcoin ever minted, ever created. And so it can't be manipulated like fiat money supplies. And even like gold, we've seen the madness out in London this last week, last few weeks, and what's happening there. And this is kind of an important thing because people think, oh yeah, but I buy gold, then I'm protected. But gold, I mean, if gold was not so manipulated, it would be at a much higher price. It would be, in the tens of thousands. It wouldn't be just hovering around 3. And so the issue there is that you have sovereigns buying gold. You have some worries about Trump tariffs and bringing your gold back into the States and having a sudden tariff on it. So you've got the COMEX is bringing gold back into New York and into the United States. And so you have players around the world that are buying gold, like the BRICS countries, to try to avoid having to buy U.S. treasuries in order to have dollars, because everybody still needs dollars around the world. But if you have gold, then you're supposedly protected. Well, the issue in the last few weeks out in London is that the Bank of England realized we don't have all the gold in our vaults. We can't just send it out. So it's going to take us 4 to 8 weeks to get you your gold. Okay, so then think about that. You got 4 to 8 weeks before you can get your hard asset that is supposedly hard and being held in a vault for you. Okay, that's number one. Then you've got to transfer it. You've got to transport it, which you've got to put it on a truck and a plane or a boat or something on rail to get it to wherever you need it to be. And it's got to be protected. So you have to pay for security for it. It's very heavy stuff. And they even said it like, this is heavy. Yeah. The Bank of England was on stage at a press conference saying, well, it's really heavy. So it takes a while to move.
Yeah.
So if you want to move $1 billion of gold, think about all that would take to do that, to get it from London to New York. Then think about something like Bitcoin, where you have verifiable addresses and it's immutable. And that you look at that address and you see exactly how much Bitcoin is in that part of the blockchain, right? It's very easily auditable. You don't have to worry that it might be just gold-plated nickel. Like you saw in the JP Morgan vaults, they had $50 million of gold-plated nickel by accident. They didn't know about. Well, that's not going to happen. You can move it. You can move $1 billion of Bitcoin in less than 10 minutes for a few bucks.
Right.
It's staggering, and people are starting to catch on to this. And so the younger generation is very comfortable with that digital asset, that concept. The older generation, not so much. They love the gold. Typically, my mom loves Bitcoin, but you have the younger generation now is looking at things like digital assets, and Bitcoin is one of those digital assets that is starting to bring people over to a new asset class and it's emerging and it's growing rapidly. And that's the point, you know, that the inflation, keep up inflation and demographics, you know, that's one side of it. But what you just hit on is it's probably this is the key development for Bitcoin in this last 18 months. You've had massive tailwinds for this asset class, and we can talk through each of those. But just like you said, you have these sovereign wealth funds, institutions, very large, high net worth individuals coming into this new asset class because they know that and this is all game theory now, is that I need to get some of this before the price gets away from me. And then people look at it and say, oh God, it's $100,000. It's too late. I can't afford a Bitcoin now. Where it is, you know, you and I know that that's just a number. Like the debasement's not going to stop. This is going to continue to go up in value, meaning the dollar is going to go down in value against it. So they're not sensitive to price like retail is. Like, you know, some of the smaller players are who only have so much money. They're very sensitive to the price of Bitcoin. Whereas you have Abu Dhabi come in, they could buy $500 million of Bitcoin,
and they did,
and just go along in the market. Like I'm not price sensitive. I'm not waiting for it to get back to 70.
Yeah,
just participate and go along in the market, and that's what they did. And what's interesting about that is they bought the ETFs. Apparently, from the report, they bought ETFs. And so people would now say, wow, but that's just paper Bitcoin. It's not. The ETFs have a legal obligation to own the underlying Bitcoin. If you're a spot ETF like IBIT or like, you know, FBTC or Bitwise, you have to own those, the corresponding amount of Bitcoin to the NAV. Okay. So, but that is an easy way for any player to get in. Sovereign funds, governments, institutions, endowments, pension funds, they can just buy the ETF now. That's a super highway that's been built.
Yeah.
It's so easy for them to get on that. So institutional adoption is happening. It's happening quietly. You do see companies coming in and buying Bitcoin. You do hear about companies buying actual Bitcoin on their treasuries. But this is kind of like, it's all now forming and taking shape in exactly what you just said. It's becoming adopted as a new asset class.
Yeah. Like, what's the difference between how retail thinks about Bitcoin and like institutional allocators and like hedge funds would approach Bitcoin?
That's a good question. You know, it depends on the type of hedge fund. And so if you're an active hedge fund, like really actively managing your capital and you're trading a lot, then you'll be trading Bitcoin and you'll be going long, you'll be going short, you'll have all kinds of strategies around it, put call strategies, you know, you might be doing derivatives with it. You might be doing hedge trades against or pairs trades with other currencies. You know, there's all kinds of stuff that hedge funds will do with the base currency, with the base asset. That's one type. Another type is, you know, you'll be buying companies that are either involved with or are investing in Bitcoin themselves, you know, things like Strategy, former MicroStrategy, you know, MetaPlanet and other ones, Bitcoin miners, obviously. So that's another strategy. And then you've got, you know, so that's kind of like the hedge fund world, non-endowment or pension funds. They would just be buying Bitcoin. Like they're not going to be doing all this stuff. They might buy some of these stocks, but probably through some other agent, through a hedge fund or through another money manager, probably. But then on the other side, so it's got kind of like, you know, just the regular hedge fund side. You got your VC side, which is the venture capitalists are buying super, super early stage, highly speculative, very young companies, not typically just not revenue generating. And so, but they have a basket or a portfolio of these investments, and they hope that, one or two of them become unicorns to make the returns for the whole portfolio. Because the reality is that most of those companies don't really make it after 10 or 15 years.
Yeah.
That's just the reality of VC investing. On the other side of the spectrum, you've got, companies like investment companies or hedge funds that will invest in revenue generating companies that are a little bit, they're longer in the tooth, that are revenue generating, they're up and running and have this window of 5 or 10 years where they'll really grow rapidly, along with Bitcoin. And that's kind of in my mind, that's kind of a sweet spot of this industry right now.
What's a way or a couple ways that you think about how you sort of measure where Bitcoin's going?
Yeah, I mean, we talk about this a lot. You and I we just pulled up the chart before the show, taking a peek at it. The global assets, the total global assets. Jesse Myers puts this out, and that chart. And kind of, it's funny. I made the same exact chart, and then I saw his in Saylor's presentation a couple days later. We were like maybe $10 trillion off here and there on the big pieces. But they look almost exactly alike. So the reality is it's a pretty definable set of investable assets in the world that doesn't include the derivatives. So if you just look at the investable assets, it's $900 trillion. But in that, Bitcoin is now 2 trillion. So it's a really easy way to visualize these big blocks that Bitcoin can start taking market share away from. So you've got gold is about 18 trillion. Then you've got your money supply and your real estate over 300 trillion. You got your bonds, 300 trillion. You've got your stocks, 120, 130 trillion. So where does Bitcoin start taking market share away from? Meaning, where do people start taking their allocations from and putting it to Bitcoin instead, reallocating their capital? That's one part of it, right? Really important part of it, though, is that where's the puck going? Where's that $900 trillion going to be in 10 years? Is it going to be 920 trillion? Or is it going to be closer to quadrillion, which you thought it's going to be
1.6 quadrillion by 2030.
Yeah. So we're talking about 5 years from now.
Yeah.
It's a massive move, but that's probably, I mean, I would say that's right in the range.
It's not that big. It's 30 or 40%.
That's it, which is money supply, 7 or 8% between now and then. There you are.
Thanks for watching. Don't forget to subscribe to access my free daily crypto updates and expert predictions direct to your inbox.